Hey, good afternoon, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday. Hope you guys have a lot of good plans coming up since summer's almost done. August 2nd. We got a bunch of economic news releases to go over today with the all important jobs numbers. So stay tuned. We got the non-farm payrolls for the month of July. We had 188,000, so this is a reduction from the 195,000 reported last month. So they reduced that number actually down to 188, and the forecast for the month of July was 180. Now, a lot of investors actually were thinking this could be hotter and come in around 220, especially after seeing the ADP number earlier in the week. And it came in at whoppingly low 162. So with the reduction of the previous month's reporting and the forecast came in far short of the forecast. This was not obviously good news. We got the unemployment rate for the month of July. So, of course, last month we reported 7.6, so they figured that rate might come down to 7.5, and it dropped all the way down to 7.4. So, good news there if you look at the surface, but we all really know the real truth behind that. Basically, people stopped looking for work and fell off the numbers. So that number obviously is going to be a bit misleading. And then we also got the personal income for the month of June. Now, personal income grew last month at 0.4%, and they figured that forecast for June was going to come up at 0.5%, and it came shy of the forecast at 0.3%. And on the other hand, we got the consumer spending for the month of June, which we had a 0.2% growth for the month of May, and then June went up. The forecast for June was a 0.5%, and of course it came in at forecast. So people didn't make as much money in June, but they spent more money. And then we got the core PCE price index. This is the Fed's favorite gauge for inflationary news. Now, the core for PCE is basically where you're stripping out food and energy, which creates the volatility. So they take that out of the headline number and they look at the core. So we had a 0.1% growth in the May, and then we figured it was going to climb up a little bit to 0.2, and it did. So forecast came in, and that's obviously really good news because we've been really having a problem with the inflation rate actually being too low, and there was a lot of concerns for deflation or stagnation. So those are some concerns that are out there, and we need that actually to come up a little bit further. Inflation in moderate terms is actually a good thing. And then we got the factory orders for the month of June, and we had a 3% increase in the month of May, and we figured that increase would continue, but at 2.3, at a reduced rate at 2.3, and it did continue, but even didn't meet the forecast of 2.3. It came in at 1.5%. So not as good a news there in that section there. So let's go ahead and look at the other side there. Stock market was up. They're kind of shrugging off the other information on there from all the negative news. And then also earlier today, the Fed member, he's out of St. Louis. He's the Fed Reserve member out of St. Louis. Bullard spoke earlier today. Basically, he's telling people that in his speech that the Fed really kind of needs to look at more data before they make any determination if they're going to reduce or taper off on their bond purchases. So hopefully that will kind of ease a little bit of concerns to investors. I think he's trying to do his part to try to ease those concerns, and hopefully the Fed after this last meeting did raise some concerns about the spike in the interest rates back starting in May, and how that could slow down the housing recovery as well. So so hopefully we can get those counteracted a little bit. So let's take a look at bond market, see what's going on with the interest rates. So here's the seesaw basically. We might as well just call it seesaw because as soon as it goes up, it comes right back down next day and right back up. So we're getting towards the close of day here, and we're basically, it looks like we're going to be right about where we left off on Wednesday. Where we left off. So we're going to be, looks like in that range where we're going to be in the high 100s. So we basically got that 1 point that we lost yesterday back today. So that's obviously good news for interest rates. So that means we have a nice improvement in our interest rates today. Monday, next week's not a lot of economic news release. So it'll be kind of a light week. We do got just a couple items that will be kind of semi-important. But otherwise, it's going to be reliant on other things like the stock market. What's going to drive the stock market? That will affect the bond market. All right, folks. I hope you guys again enjoy your long week, or not long weekend. I hope you guys enjoy your weekend coming up, and thanks for watching. We'll hopefully catch you guys on Monday.